Hey guys, welcome back to the channel. I'm going to make a little video here about real estate and about Bitcoin and just kind of looking at the two as a form of investment. Crunch some numbers on real estate investment, specifically here in Canada. I took a bunch of average costs of carrying that investment and initial down payments and that kind of stuff. And the numbers were quite surprising in the end. So I thought I'd share that with you guys. So please stick around till the end. I have lots of information to share with you guys. I spent a lot of time kind of coming up with these numbers and stuff. So it'd be nice to share that with you guys. And if you haven't already, please subscribe to the channel. I often talk about this kind of stuff, and I'd like to help get the information out there just to kind of open people's minds to looking at different perspectives on investing and ways that we can grow our wealth and get ahead. So stick around to the end, and I'm sure you'll be happy with the video. So with that being said, let's get into it. So a lot of people are looking to often people are buying real estate as an investment. They want to purchase it as a way to grow their capital, and it's often seen as one of the safest forms of investment. And there is some good reason for that. It's always going up in value, or I shouldn't say always, but over the long term, it does always appreciate in value with some short deflationary down trends in there, but overall, it's often just going up in value. And so that's why it's traditionally been a great store of value. And so people like to put their capital there, and it's kind of been a traditional way to get ahead, especially here in Canada. It's often seen as the right thing to do. However, in my opinion, things have changed. The numbers have changed. The economic outlook has changed, and a lot of that. So, in my opinion, I think what has traditionally worked in the past is no longer working like it used to. The old way of just buying a home and putting all your money into that and doing all right. I don't think that is the case anymore. And a big reason for that is these overinflated prices are, in my opinion, they're overinflated because if you look at the average wages and what's happening there compared to the average price of a home, and the homes have went, fivefold in price in 20 years, and wages have only gone up, 30 to 40%. So that is creating a huge discrepancy between how much you can earn and how much your average home is costing you. And so it's really pushing the affordability of these homes out of reach from your average individual. And then what that does is you don't have new people coming into the market that are able to sustain these prices. When the newer generations can't afford to come in and buy their first entry-level home, then you don't have new participants in the market, which is what sustains a market and keeps it healthy and keeps it growing. So I think what we've been seeing over the last while is a lot of homeowners that already own, a lot of speculative investment. And I know here in Canada, especially in the overinflated markets or the hottest markets like Vancouver and Toronto, we've seen a lot of money laundering, and that where we have foreign money coming in and these shell corporations that are able to buy real estate and speculate and park their money there and then grow the capital. So that has really put a lot of upward pressure on the markets. And in the last while, we've had a lot of free money because of the pandemic and all that. So there's been record levels of money being given out to average individuals, which has created a lot more liquidity in the market. So that has helped keep things afloat and keep things inflating temporarily, but I think that will be coming to an end at some point. And even if the money doesn't come to an end, I think the effects of that money might change, and we might see some downward pressure on the markets. And the alarming thing that I looked at was really the carrying cost of that investment. So any investment that you make, you want to look at all the numbers. And so if you invest in something like a stock, there isn't really a carrying cost, a direct carrying cost, but there may be an opportunity cost where your capital is parked there, so you're missing out on some other opportunity. But with real estate, there is actually a massive carrying cost, and some of the things that people overlook are you have if you have less than 20% down here in Canada, you are obligated to pay a CMHC insurance fee, and that is if it's 10%, between 5 and 10%, you're paying a 3% fee on top of 3% of the total cost of that home you have to pay upfront as an insurance cost. And if you have less than 5%, if you have less than 10%, so between 5 and 10% down, then you're paying 5% of the total cost of that home upfront, which equates to a lot of money. So if we look at your average home in Canada, the average home of a price of a detached home is now $607,000, which is astronomical. And so if I took that number and I kind of looked at it, and I just looked at, with an average down payment, so let's say 10%, because not everyone can come up with 20% down. 20% down on 600,000 is roughly 120,000, and not too many people have that kind of capital just sitting around these days with the cost of living so high. Very few people are able to put that much money aside. So I took the 10% number, and that's $60,000 down payment, which takes most people a lot of time to save up. So it's $60,000 even to take a swing at investing in real estate, which is a huge number. Not a lot of people have that ability to come up with that kind of cash. So then right off the hop, you're paying around 17,000 in CMHC fees, and then you purchase the real estate. And then there's all kinds of carrying costs. You have property tax, you have insurance, you have mandatory insurance if you have a mortgage, and you have maintenance fees on that home. You have utilities, which you may or may not factor in. For this, I didn't factor in utilities because if you're looking at it as a home rather than investment, you'd be paying that anyways. But if you're looking strictly as an investment, you may want to consider the utilities, which makes this number even less appealing. So the other thing I used is a 5% appreciation in the value of a home per year. That's the average over the last 20 years. And so with the home appreciating at 5% a year and just using kind of the base numbers for all of your costs involved, you ended up coming out at the end of a 5-year investment term, you come out at $150,000 loss, even with your house appreciating by 5% a year. So it's appreciated 25% in 5 years, and still with all of some of the carrying costs, not even including the utility costs, you came out losing $150,000. And that's pretty surprising to most. It was surprising to me. I didn't think it was that bad, but there's so many fees and stuff people don't look at. And a big part of that is the interest. So in the beginning, when you're making your monthly payments, over 5 years, you pay $180,000 towards this average home, and $120,000 of that goes to interest payments that you'll never see back. That's money in the pockets of the bankers, and only $66,000 went to the principal. So at the end of the term, you're still left owing $480,000 on the mortgage. And again, this was a $600,000 home with a $60,000 down payment. So you're mortgaged for $540, and then at the end you're left owing $480. And then you have to remember, when you go to sell, you are forced to pay the real estate fees, which is another big hefty bill. It was about $25,000 right there that you have to pay the real estate fees. So that's a big loss, and it adds up in a hurry. So you have all of these, like I said, insurance, you have property tax, you have utilities, you have interest rates. All of this is the carrying cost of making that investment. And those a lot of those factors are out of your control. So, what we're seeing here in BC at the moment, we're seeing insurance companies come in, and in a lot of cases, they're tripling or quadrupling people's insurance cost. And this isn't a choice you have, this is mandatory. If you have a mortgage with the bank, you're obligated to have insurance to protect that asset or that investment that the bank has a big share or stake in. And so, if the banks are requiring you to get this insurance, what's happening now is the insurance companies are coming in and quadrupling your insurance because they're saying that with the cost of lumber going so high, the cost of replacement of this investment is so much higher that the insurance companies are raising their rates just unheard of levels. So this is an unknown. This number is out of your control, and that's something I don't like when I'm looking at an investment. I like to know all of my numbers, so that's a big unknown, and that number can vary quite a bit as we're seeing, and that increases your carrying cost of that investment, and it's eating away at your profit from that investment. And another big unknown is interest rates. And I know a lot of people are arguing that they can't raise interest rates, and that in my opinion is quite likely. I don't think rates will go up for some time. I think we'd have to see some pretty rampant inflation for them to raise rates because the governments are heavily indebted, and if they raise rates, that also means that they're paying a lot more to carry their own debt. So I think that it's in their best interest to keep rates low at the moment, but that is a factor that can change, and it can change quite quickly. So that is another factor I don't like, that it's out of my control. And so if we look at something in comparison like Bitcoin, there actually is no carrying cost. So there's no actual yield, there's no dividend payout, or there's no, let's say, rental income potential there or anything like that. So there's no way to make money directly off it, but you can ride up the appreciating asset value. And there's no carrying cost. So you can buy it, put it in cold storage, and just forget it. And as long as you're not transferring that around or anything, you just let the network uh, do its thing, and all the people that are busy trading and transferring money around, they're the ones that are paying to maintain the security of that network, which is a beautiful thing because then you can just buy it, set it, and forget it, and there's no carrying cost there. So that to me is quite attractive about Bitcoin. And if I look at it like that, with the average gains of 200% per year over the last 12 years, Bitcoin is a great investment with almost no carrying costs, or actually no carrying costs. There's only, you could argue, an opportunity cost, but there hasn't been very many assets that are performing that well year over year. So that's something I like to consider. And the one thing I like to think about is that we have a whole new generation of people that are now earning money and looking for ways to invest and all of that. But with real estate at these new highs, it's so hard for your average investor to get into the market when you need, $60,000 to $120,000 down payment just to even take a swing at this kind of investing. And that's just an average detached home. There's not even, you don't even have any rental income potential there. So me personally, if I was to invest in real estate, I'd be looking for something that had a suite that I can invest or that I could rent out, because I want to be producing income off of this investment. I don't want it just sitting there and collecting dust. I want it producing capital. So that's something to look at, but in most areas that puts you in a much higher price range. So that's something to consider. But I think that this really high cost entry barrier for your new investors is what is going to essentially put a lot of downward pressure on the market. Maybe only momentarily, but I think it is coming. And the other big factor is these high debt levels. So when your average investor can't your younger generation can't afford to invest, then basically they're looking for somewhere else to invest. And Bitcoin, there's no entry level. You could invest $20, you could invest $40, you could invest a little bit every week. And so that is a much lower, there's no barrier to entry. Really, it's just learning a little bit about technology. That's your main barrier to entry there. So to me, I think with real estate being so far out of reach from your average investor, now I think that a lot of people will be looking at other options. And with these carrying costs so high on real estate, when we're looking at, property tax, that's another variable where as your home price is going up, you're thinking, oh, great, this is a great thing. I'm worth so much more money here. But the reality is it just allows the government to tax you more. And so you're paying more of a carrying cost there. And really, those aren't realized gains until you go to sell. So it's not really helping you to have your price of your home appreciate until you actually realize those gains. So often what it's doing here in Canada is it's making people feel a lot richer than they are, and then they're going out and they're taking these home equity line of credits, and they're taking out more money. They're taking out the equity that they're building up in these homes, and then they're using that to live off of because they're mortgage poor and a lot of their money is going to maintaining that mortgage. So that is again eating away at that equity, and it's creating a bigger bubble in the debt markets, in my opinion. And real estate is highly over leveraged in Canada. It's now it's responsible for over 50% of our GDP. So that's a lot of eggs in one basket, if you ask me. And that's why I think we could see some downward pressure as these debt markets, they pop a little bit, because with all these lockdowns and businesses going under at record rates, there's going to be some people that no longer can afford these carrying costs of maintaining these really expensive investments. So that's why I think we will see some downward pressure on the real estate market after this, the initial kind of panic of this new reality kind of cools off, and we have a lot of people that were living in condos. They're now looking to get into a 2-bedroom or something, because if they're going to be on lockdown, they're going to be stuck at home working from home. They want a little bit of a yard now. They need a little bit more space. They need an office and that. So I think that's why we're seeing a lot of people move around. We're seeing retirees sell, to downsize, to shift, to move to the area they actually want to live in now. And so I think that's kind of what's pushed prices up momentarily, and also the mortgage deferrals and all of this free money that's been pumped into the system. That's why we're seeing this initial rise in prices. But I'm of the belief that we'll see some downward pressure over the next year or two when we have a certain percentage of these investors that don't have the money to carry these expensive investments. And in the meantime, I think we'll see upward pressure on the Bitcoin markets because people come to realize that there's no carrying cost there. It's a low barrier to entry, and there's just so many interesting and attractive things about Bitcoin as an investment. And I think more and more people will wake up to that as time moves forward. We have a whole bunch of corporations and companies that are sitting on all kinds of cash in their treasuries. And now that cash is being debased and inflated away. So it's putting pressure on these companies to look for somewhere to hedge and to diversify. And real estate, especially commercial real estate and even residential real estate, just isn't as attractive as it used to be. There's very few cash flow positive deals. When I say cash flow positive, that means all of your expenses minus what you take that off of what you're actually making on the property, and then you see if you're cash flow positive. So here in Canada, there's almost no cash flow positive deals at the moment because prices are so high. And there's also a lot of stuff going on in the major city centers where people are looking to get out of the condos now, and they're able to relocate because their jobs are now remote. So I think we're seeing a bit of downward pressure in these markets, and I think that will be a trend that continues over the next few years, and so that could really change the outlook in the markets. So these are all things to take into consideration and just keep an eye on. This is not investment advice. It's just some observations I like to make and point out, and some factors to take into account if you're really looking at what area you want to invest in, how you want to invest your capital. These are all things that you should take into consideration when you're looking at to see if real estate is a good investment. You really want to look at all the numbers. So I hope you guys enjoyed that video. Let me know in the comments below what you think. Let me know what you guys are doing and where you see markets going. I hope you enjoyed that, and I'll see you guys in the next video.